Tesla, as an automotive and clean energy production company, is one of the world's most valuable companies and remains to be the world's best automaker. Tesla is one of the few companies that have crossed the $1 trillion mark. However, the stock of some companies is set to beat the Tesla stock by 2030. What are some examples of stock that could beat Tesla stock by 2030, and why? Join me today in this video as we learn about the stock that could beat Tesla by 2030. Tesla was founded in July 2003 by Martin Eberhard and Mark Tarpenning as Tesla Motors. Later, in February 2004, Elon Musk became its largest shareholder via a $6.5 million investment. As a result of his hard work, he was appointed the company's CEO in 2008. Consequently, the tech mogul worked to make Tesla a leader in transport and energy through electric vehicles and solar power. Tesla began its first car manufacture in 2009 with a Roadster sports car. Since then, the company has worked on several models like the Model S sedan in 2012, the Model X SUV in 2015, the Model 3 sedan in 2017, and the Model Y crossover in 2020. The Model 3 thrived in the market as it became the first electric car to sell 1 million units worldwide. Tesla's global sales were 936,222 cars in 2021, which was an 87% increase over 2020, making a cumulative sale of 2.3 million cars at the end of 2021. Consequently, Tesla's market capitalization reached $1 trillion by October 2021. Unfortunately, Tesla has been subject to many lawsuits arising from the company's manufacture of autopilot vehicles. This happened in September 2021 when the National Highway Traffic Safety Administration, NHTSA, ordered Tesla to submit data pertaining to all sold U.S. vehicles equipped with autopilot following the agency's investigations into traffic deaths involving the use of autopilot. Even so, the company has accomplished much under Musk's leadership. Tesla is currently doing well in the market since it's overseeing several projects that are doing quite well in the market. Nevertheless, its stock might be beaten by some other companies if they would double their strength in the stock market. Here are some companies that could threaten Tesla's pedestal position in the stock market in less than a decade to come. The stock of Berkshire Hathaway is poised to beat the Tesla stock by 2030. Led by Warren Buffett, the company is known for owning a diverse range of businesses. Buffett's Berkshire has been doing better despite the value not increasing annually. Better yet, its average returns are better than 20% since 1965 under Helm as the CEO. In this case, shareholders have doubled their shares in the company. However, the success of Berkshire Hathaway lies behind its investment portfolio being packed up by cyclical companies. These cyclical companies perform well when the economy of the US and the global market are expanding. When the economy is facing problems, the company also struggles in terms of performance and productivity. Buffett and his investing team are trying hard to see the company succeed. This year alone, Buffett's company is on pace to collect well north of $5 billion in dividend income. Over $4 billion in payouts this year alone, the worth of $5 billion in dividend income will help the company survive in any economy that comes its way. If the company will not face any challenges soon, it's likely to surpass Tesla's stock by 2030. The payment processor Visa is the second company that is likely to surpass Tesla's stock if every good opportunity would go its way. Visa must make up a nearly $590 billion valuation gap. With all, the biggest challenge that Visa will face is the rise of new technology like the digital payment platforms, which work cheaply as compared to the Visa itself. If it has to surpass the Tesla stock, it needs payment to continue flowing through it. But if the opposite happens, Tesla will still be at the top of the game. Visa also benefits from the cyclical nature of financial stocks like Berkshire. Since economic expansion lasts longer than dismal performance, Visa spends most of its time benefiting from an increase in consumer spending and enterprise. In the US, the largest market consumption in the world, Visa holds a 54% share of credit card network purchase volume. As of 2020, Visa acted as a payment processor and not a lending platform, although lending would help in generating income and revenue. Lending could ultimately subject Visa to loan delinquencies during recession periods. Since the company is not exposed to loan delinquencies, the company does not need to set money aside to cater for losses during recession periods. This is the best reason why Visa's profit margin is always above 50%. Plus, since cash transactions are still being conducted globally, Visa is still at its peak and growing. Broadcom is a cyclical nature of a semiconductor company solution with a market cap of $240 billion. Broadcom would need more than quadruple just to catch Tesla at its current valuation. On the brighter side, the company is encountering more opportunities that could help it surpass Tesla through its supply access and connectivity chips that are used in data centers. At present, companies need these chips direly for transferring their clients' data. The demand for these chips is not going to decrease anytime soon, not to mention that it also supplies chips used in modern vehicles. Because of this, the company has a chance to pick up the pace toward Tesla. Every company does better during expansion periods and faces challenges during recession periods, which may mean low earnings for Broadcom. Currently, the company generates most of its revenue from selling wireless chips and assorted solutions used in the next generation smartphones. Since telecom is upgrading its network to 5G, it will be helpful to Broadcom because it will lead to high demand for chips for its smartphone solution, giving Broadcom a vantage ground for gain. Another factor working in Broadcom's favor is its historically high backlog of $14.9 billion. This is a company that's booking production well into 2023. According to CEO Hock Tan, if Broadcom can maintain a large backlog of orders, its operating cash flow and valuation can steadily increase. If the Tesla stock falls, its investors are likely to get distracted and consider other options. Since Tesla is a big company with a lot of investors due to its success, we can tell that it attracts potential investors to the table. If the contrary happens, Tesla may lose more investors. Still, Tesla has manifold competitive advantages to maintain its stock market position, possibly up to 2030. Its managerial workforce especially gives Tesla a competitive edge under the leadership of Musk, who is popularly known for founding SpaceX prior to joining Tesla. Tesla's stock has been steadily increasing despite them putting minimum income in adverts while heavily investing in quality products. Tesla has had a good record of steady sales increases over the years. For instance, Tesla's global sales as of 2021 were 936,222 cars, which is an 87% increase over 2020, and cumulative sales were 2.3 million cars at the end of 2021. October 2021, Tesla's market capitalization reached $1 trillion. Tesla's car supply to China may be affected if the stock heads for recession. Tesla could create measures to mitigate any reduction due to fluctuation if it is to maintain the top in the stock market up to 2030. At the moment, Tesla opened a factory in Austin and another in Brandenburg to make supplies easier. It's now starting to increase its production. Their delivery wait times are quite long. Those cars delivered in Q1 generally carried pricing set in prior quarters and at levels lower than cars being ordered today. CFO Zach Kirkhorn said on the company's earnings call, "Production is resuming at limited levels and we're working to get back to full production as quickly as possible," he later added. Tesla doesn't expect to raise prices again soon either. Musk said on the same call, the current prices are for a vehicle delivered in the future, like 6 to 12 months from now. This shows that there is a great prospect that Tesla will maintain its stock and even do better. It is likely that Tesla's stock may not be beaten by other companies anytime soon, since the company is doing great in the market. If any would try, they may need a stable economy and continual opportunities for almost a whole decade. Anyhow, the stock market is full of surprises, and it will be hard to tell what can happen within a decade. we can only speculate that Tesla is likely to be at the top of the stock market for a long time before it is successfully dethroned. All we can do is wish to the stock market giants the very best in their trial to surpass Tesla. Thank you for watching, and don't forget to subscribe so that you don't miss any of the latest news about Tesla stock and any Elon Musk related news.